The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Of course, Monday was a holiday, and I believe Friday is a holiday. So we'll be here for the remaining days of the market being open. Dow's up 34 at 19,967. S&P is up 8, up 0.36%. Dow's only up 0.17 at 2271.85. The comp index is up 39 at 5502. The VIX index is up 61 cents at 12.05. Still not in the teens, but I have to tell you something. That VIX index is becoming a lot more interesting. We've got the E-mini up 725. Now, this is the pattern I've been looking at. It's the same as with the Dow. You see this rectangle formation? You can see it a lot better here in the continuous contract of the E-mini, which is trading right now at exactly the same price as the March E-mini. So I like to use it because I can show you the monthly chart as well. I don't have that information for the March E-mini, S&P E-mini. Now what we're looking at is this rectangle. Remember, rectangle formations, my expression is a rectangle formation can last a lot longer than your patience. 2269.50 was the high back on the 20th of December. Slides down to 2251.50. Rallied back this morning in leg C. I call this gray C. In other words, it's underneath that previous high, and it's certainly under the 2273 round number all-time high that was made back in early December. Now, what's really important about this is that there is no bad news. I must emphasize this. I spent pretty much since my wife was working all weekend, I had a lot of free time, and I spent pretty much Thursday as well, Saturday, Sunday, and Monday, going through in great detail lots and lots and lots and lots of charts. And the conclusion that I've come to is that this is a rotational upside correction. Remember, we can have these at the bottom where the weakest links suddenly come alive as the ones that have been the strongest start to digest their gains. The same thing can happen at the top. And what we're seeing here is that the semiconductors are still on fire. The Dow is starting to get a little bit tired at this particular point. SPY, same thing. QQQ this morning. Let me see. Should I do that? Yeah, I'll keep running the numbers. So the QQQ is at 121.28, up $1.07. Now that's a lot of points. That's 0.88%. And it already made what I'd call the peak after we had no trade on this. Why? The stochastic was way above 80% at 85%. The MACD was expanding and the histogram was still way above 0%. I just didn't see this as a short. That's number one. I'm getting close to seeing this as a potential short. I'm even getting close to thinking that we could have some kind of repercussion that comes in. One of the expressions that I've got, one of the many expressions I've got, is that if a market survives September, October, and then makes a recovery high, a yearly recovery high, there's a very good chance that going into the end of December, it closes very close to, at, or just below its yearly all-time high. Yearly high, I should say. In this case, it would be an all-time high. And that's kind of what I'm looking at. And when I say there's no bad news, you need something that really permeates the market with this dark cloud. You're looking at the sun, suddenly there's this cloud that filters over. I don't see the cloud. I'm looking at crude oil. At this particular point, crude oil has had a very nice rate. It's consolidating in a rectangle formation since the peak E top that it made back on the 12th of December at 55.58. I'm looking at the TLT. Pulling back down 66 cents. That's the Lehman 20-year iShare Treasury Bond ETF, just forming this H pattern that can go to an M pattern. And that tells me, and gold at GC. Gold had a nice early morning spike. It was up about 9 something. Now it's up 3.9 at 11:37. It's attempting to have some kind of a rally. The VIX index, let me go to the VIX index, VIX.X. It's up. It's off the 11.30 low that was made about 4 days ago. Let me double check. Yep. No, 1093. Thought that looked a little funny. 10.93. That's not the all-time low. The VIX index has been down in the nines. Look at this. If you will go all the way back to 9.39 back in December of 2006. Went down to 9.39. So, yeah, it's getting close, but it's not 12 to 9, it's 3 points. That's 30%. So, meantime, back at the ranch, the VIX index is indicating to me that there's still buying pressure. But what really is important about this particular stage is that if you're looking at the BKX index, the BKX index is the bank index. It's the, I shouldn't type it there. Type it in right. Yeah. Wonder how that happened. BKX, I keep hitting the wrong thing. And what that is doing at this particular point, up 26 cents at 93.40, it's had this rectangle formation at 93.65, the high of the 8th of December. Pull back to the 9-period exponential moving average. Look at this. Look at that. It's walking the 9-period exponential moving average, that black line. Now, what's really interesting is that little thin red line is about to go below. If it goes below, that maintains the upward mobility. But at this particular point, it is still trading just above that 9-period exponential moving average, and that's the reason why there's such limited upside. And I just want to check at 93.65. Thought I checked that over the weekend. Yeah, 93.43 was the high on the 15th. Today's high is 93.44. It's still underneath 93.65. So when I'm looking at this, I'm suggesting to you that within the context of this market, sideways is really end of the year squaring. There are some buyers coming in just to support stocks that they didn't have or they would like to own more of. And there are other people getting out. And that's the reason why you've got something like the IBB, which we actually shorted on Friday. And what happened was I thought we'd be able to have a really good trade. The trade looked to me like the IBB was stuck. It was going to make a tiny little bounce and then come back in the H that goes to a lowercase m formation. And then out of the blue, it didn't even get to our shorting price of over 272 on Friday. And then out of the blue, there was a rally. And then the rally kept going. And I thought, what the heck? And I looked at the stocks. Nothing was happening except then I suddenly noticed that BIIB, that's Biogen IDEC, Biogen Inc., trading was trading up 14 points or something. And that by itself took the IBB higher. I still think so. Now we're out for a 1% and a 2% loss in two small positions. I still think that IBB is the one that's going to be having very limited upside. Now it's 273.85. Now it's coming back down again. I think very limited. I think that pattern's there to stay. And that's what I wanted to show, that there are some stocks that are just kind of stuck. I want you to talk about the XLE. I don't often get a chance to do that. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 27, S&P's up 7. We'll be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So let me just get this out the way. The New York Stock Exchange is up 21 points at 11,150. There was some crazy error, and it was a very interesting error. When you get some kind of an accident or just an isolated price point, very often that becomes the high of the day or the low of the day. And you know exactly that it opened at that level. It was an error. There are very few, maybe a couple of trades there. Usually there are no trades. But the next thing you know is that it's eliminated. Once in a while, it's kept there, but most of the time they get rid of the actual incident itself. So that when you look back, you don't see it. I remember one time the SPY went to, oh my goodness, let me see if I can find it. The SPY went to a high. I won't be able to do that. Oh, maybe I can. I'm just guessing, but the SPY went to something like 212, something or other like that. And it was way below that at the time. And I remember when I was interviewed by Tom one afternoon, I actually said to him, and we both agreed that we've seen this happen before. And it's almost like a foreteller of something that's going on. And eventually the price was hit. It went even above 212. Of course, now it's way at 228. It hit a high there just recently, the SPY of 228.34. And it's remarkable how that happens. It might take time, but that gets filled in. This is something that's very interesting because the New York Stock Exchange had trades. I was actually following this. I thought, hey, whoa, what's going on here? And it had a high and a low, and it was trading at a certain point. And it was up 504 points. I mean, this is crazy stuff. Well, it turns out it was wrong, and they've corrected it in that the price is now at 11,148. And, of course, what this does is just messes up the charts. Imagine if you're trading, and you're trading with a chart that says if it goes above certain level, buy or sell, whatever it is. I mean, you could have just been taken to the cleaners today with something like that. Meantime, back at the range, we'll see if they get rid of this because at this point you've not seen the New York Stock Exchange break above 11,254 to confirm. It doesn't even have to close there. It just has to go to 11,255. And at that point, I've got a confirmation that the buy mode in the monthly, it's the only one really that's missing that's very important, that I haven't really got a conviction of what I call a blue. In other words, I haven't got, this is still a gray leg C. I want you to push above 11,254, and I think at some point it will. Okay, now let's get back to the nitty-gritties. I was asked about natural gas, and my opinion here is that natural gas is trying for leg D. It's trading at 3.751. It went to 3.793 on the 9th of December at peak C, and then it came down really sharply. I mean, that was big. It came down to 3.258. And now what will happen is if it makes that high leg D in the daily, that's only a gray leg B in the weekly, because it made a peak F top right at that high of October at 3.882. But what's even more important is that if it goes above that high of October, it starts leg D in the monthly chart, and that really is important because I like to see monthly charts that have the capability of giving a full buy mode, because it means that the next pullback should in fact be contained at a very important support level. That would be the support level of 3.423, the 9-period exponential moving average. So once you start to get all these things filling in, or at least in the design and the formation of the chart pattern, start to confirm that the larger trend is in place, I think that's very good. And for crude oil, that would say that there needs to be, in this case, I don't want to see it just pop and break about 56.27 for leg B. I want to see it hold. And in fact, this particular move in crude oil, I don't know if it can do that, but if it's going to succeed in giving us a great heads up that crude oil in 2017 will have a wider parameter than, say, the 56s to the 48s. You want to see a good close above this candle, and that candle's high is on the continuous contract, 56.27. That's the high of June, whatever that is on your contract. Okay, so I think we've covered a bunch of things here, but what I did want to do is why did I spend so much time this weekend on just studying? Actually, this is one of those times where I'm not going to say I looked at 100 and something. I looked at certain stocks in all configurations. I spent a lot of time on Goldman Sachs. Why? Because Goldman Sachs has come back to being a leader. For a long time, Goldman Sachs was sitting in the corner being scolded and not participating because they had done some things that were very questionable. And there were lawsuits and Congress it was just not a good scene for Goldman Sachs. All of a sudden, Goldman Sachs, and if you look at the history books, you look at Goldman Sachs, remember I did that webinar where I included a tremendous amount about Goldman Sachs in 1929 when they went public, and then they bought some companies and they split and they did a whole bunch of things. Well, Goldman Sachs has almost always historically had at least one, if not a slew of their top people as financiers, as economists, as whatever in administrations. Regardless, it doesn't matter whether it's Republican or Democrat. So I've got a feeling that this Goldman Sachs lunge from the 138 level from June of this past year to the 245 high that was made 2 weeks ago, which is still historically under the 250.70 October 2007 high. I'm suspecting that Goldman is back in play, that Goldman, as part of the financials, is going to be a really important stock in 2017. And all I can say is we would like to scale in on major turns to the downside. Why? Because this week there is a chance that Goldman could make a leg D at 245.58. That's really not the point. The point is I've drawn in some kind of a flag formation, or it's really a rectangle formation. And my suspicion is that if the 232 to 230 key support, if that's broken in the next 6 weeks, that there will be quite a sudden sharp pullback. It could be rates, it could be any, I don't care what it is. And at that time, I want to start looking at Goldman as, and here this is going to get really interesting. I can only call the monthly chart a gray leg A to the upside. I need 250.71 to make that blue. I have no other way to count Goldman Sachs and the Chapman wave methodology as anything but a leg A at this point, because there was a G. I went through this over the weekend, believe me, dozens of times, trying to find a different wave count. There is one wave count that is a possibility, but even then, that's just a stretch. I just don't do that. I don't like to make things a stretch. It either is or it isn't. And my thinking here is that Goldman is going to have a very good 2017. Therefore, the XLF, which is now like an IPO, it's really hard to see. Let's go to the bank index, the BKX index. The BKX index is in a leg B. It's also a gray leg B. Why? Because it's way under its all-time high. Oh, I haven't got this renotation. I'll do the renotation in the next couple of days. 121.16, and it's trading at 93. That's got a long way to go to test its all-time high of February, I think it was, of 2007. Basil Chapman, Tiger Technicians Hour. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're back. Dow's up 25, S&P's up 7, still much stronger than the Dow. And then IBB is down now. It's at 273.83, giving back huge gains earlier on. It was way up at 276.13. Very interesting. So a question I had was gold. What was the question exactly? Basil, gold, GCG7. Can you envision your uptrend now underway from the 1124 low? Thanks. So Z in the Den, I'm going to say I do envision gold coming alive at some point. I can even see in a short term that there could be a rally coming maybe end of the week or beginning of next week. But I'm going to call that a counter trend rally, and two reasons. If you look at the EUR-USD, the euro-dollar currency pair, a little bit of a bounce, a nice candle last week in terms of making some kind of a low. This is the currency pair. It has failed completely to test the low bar of December, the week of December the 4th of last year, exactly a year ago at 1.05387. But this is a nice candle, and I'm suspecting this candle could give you a little bit of a bounce, but the flat stochastic at 9.84% says to me no. You've got to get a V-shaped recovery in the stochastic. This is what we spent some time on during my webinar last week, and in fact, I'll be sending some charts to my site again just to explain. What happens with a flat stochastic is you don't have the torque to have a rally that is commensurate with the price movement. You see, nothing's happened here in the price. Now, there are times where you can go flat, but then what happens, you've got to get a brand new buy signal, and you've got to see the stochastic go very quickly from the 9%, the single digits, to the 15%, kind of a double digits. Not good enough. You want to see the price power through some very important 9-period exponential moving average or a peak or something upside. And within that context, you want to see the stochastic start to make 20% its base, and it moves higher as the MACD, and that's really what you're going to have to see. The H pattern that goes to an M pattern does, in my work, present an opportunity for the euro dollar over the coming January, February, for the coming 2 months, to be able to make some kind of a low that becomes a tradable low. And that's where we're going to see whether the dollar can pull back. And let me go to the dollar just to show you the inverse. See the breakout? This is not just an H that goes to an M pattern upside down with a nice price movement above. This is a major turn to the upside. And we've closed 1 month in November way above the 100.51 level. Well, a point and a little bit is not way, but it is in the candle formation. And this month we've gone even higher. We've gone above the 102.05 high. We've gone to 103.65. So to me, that's just saying, let me just make that very light so that it can go there. And that's just saying that the dollar is showing tremendous strength. And the weekly chart has gone to a leg F, unless it's an instant restart. I'm calling it an F for now. I'm going to give it the entire week to see what happens. It could make a high-level consolidation. And then once it pops to the next high, I doubt whether I'm going to call that G. I'm probably going to call that C. So far, I don't have to do anything with the dollar in terms of labeling it, other than to say, I've got it as a single letter right now, F. I'll change it to a G/C, but my thinking here is that the dollar is just showing too much strength. Stochastic in the daily is at 84%. That's good. Not great, but good. And the MACD is still holding well. It hasn't crossed negative. Look at the price, the way it wants to keep holding. So if the dollar breaks under one, it's at 103.04. If the dollar closes on a weekly basis under 102, let's call it 102. It's only a point away. 102, that'll say to me, aha, 101.32 is the 9-period moving average. Now we can head towards that level. So I hope I answered your question by saying I see just too much strength in the dollar at this point. Basil, remember a stock you had in opening call, AXDX? Oh, AXDX, yes. Let me see. I haven't looked at it for a while. Accelerate Biotech, AXDX. Oh, Accelerate Diagnostics, Inc. This has made a triple top and is pulling back. It's trading at 22.55, AXDX. And what has happened is it's got a nice little H pattern, didn't break the low. I can see it bouncing a little bit, but the weekly chart suggests that it's going to go. It's stuck in a trading range. I don't think it's going to break above 23.90, the high of the week of the 23rd of December last week. I do think that if it closes underneath 21.63 from 4 weeks ago, the low of that week, it's going to test this candle. And the way I'm looking at it, I think it is going to test the body of this candle and the 21s at some point over the coming few weeks. Just remind me again, and I've missed it if it actually starts trading and holds at 23.02. It's at 22.55. Remind me again, because then this H pattern could become a very positive move to the upside and change from an arch to a cup. So I hope that helps you there. Okay, there are things that I needed to do here. I was asked about high-grade copper. High-grade copper is a lovely candle today, but this candle comes after a major move from the lows around about 2, just under 2 actually, just in January of 2016, and then a high in 2016 of 2.75. It's trading now at 2.51. The way I'm looking at this, I think this is just chop, chop, chop. Sideways needs a little more time. I'm going to say that if correct in my analysis, I'd like someone remind me to look at copper again about the 5th to the 8th of January. Why? Because I think it needs a couple of weeks, just another week or two of digesting these huge gains, and then this pretty sharp, more than 50% decline consolidation. I am going to watch it. This is a good candle. This is a candle that actually can be very powerful, but a whole bunch of things have to happen in the next 2 candles. So let's see if that happens. But if I'm looking at something like a TGB, which is to Seiko nice action, up 88 cents. We missed this way back when it was we wanted it at 45. It went to 46 or 7. We never got it, and then it went to $1. That's what happens. But it's acting quite well, yes. So maybe it is something to look at. I want to give it another day or so. That was that. The next question was, I knew there was another question. Yeah, so I had a question. Someone wanted to short Nugget. And I said, I don't think so. I think the best moves have been done. A Nugget is the bear, the direction daily gold miners 3 times bear. Oh, they wanted to. Wait, this is the bull? Yeah, this is the bull. This is not the bear, is it? Oh boy, what does that say? Yeah, the bull. And it's trading at 6.48. And I said, hold on a little bit. I think gold might make a little bit higher high, and then you can look at it. And a chunk of the move in gold, I mean, look at the DZZ trading after a peak F, probably a peak F top. It's just gone sideways. It's holding well, but it is making that H pattern. If the DZZ 200% short gold goes to 693 under the 694 low, got to be careful, because you could start to pull back a little deeper. But right now, I think with the dollar just holding well, I don't see a trade. Just let's put it that way. I'm waiting to see what happens with the dollar. It's in a trading range, a sideways range. So is gold. So I don't really see much at that particular point until I see a breakout. Folks, Dow is up 26. Very interesting. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So I wanted to look at I had a couple of questions. I'm looking at RIG. RIG is trading at $15.36, up 62 cents. Let's see, Transocean Limited. Now, this is always a very tough call, and I'll tell you why. It made a peak that has all the characteristics of a G. Everything that I look for in a peak G. The MACD did what it's supposed to. The stochastic did what? The on-balance volume. Then it pulls back from a high of $16.66 on the 12th. Pulls back, one of the deepest corrections it's had in price, to the 14.15 level on the 15th. Then makes an arch formation, 2 little candles, doji candles, a third one with the closes at the low. Comes back down, and today has a very strong move off the 9-period moving average. So this is a pattern that I noticed way back about 15 years ago. It's a pattern that maybe I shouldn't say 15 years. Let me see. SHLD. Give me a second. I'm going to tell you exactly where I got it from. I'm not going to be able to find it. The stock is trading at $8.74, and it's still overbought. Sears Holdings Corporation. Let me go back. I believe it was the weekly chart, and I have to go back. Oh, this used to be notated every single day and hour. I'm not going to find it now. I think that's it. 2005. Maybe it was 2005. It made a pattern that looked exactly like this. It came down, looked like it was in a breakdown, and made the pattern that I call the lowercase h. And that lowercase h looked as if it broke the left side, it would go deeper down. But in fact, if it held very well, it could make a pattern that I then had to ascribe a new technique, and I called it the Sears Holdings breakout pattern. And that is because the lowercase h was successfully it did not take out the left side low, 11/18/05 weekly chart of 94.28. Instead, it broke and closed above the very important high of 109.39 back in the 13th of January of 2006. And that said, hey, you can now go back and retest the top because it's like an H pattern upside down. All right. So that is something that I kept in mind, and I've used it ever since, sometimes successfully, and sometimes I saw it but too late. And right now what I'm going to say is that if RIG goes above, doesn't have to close. I prefer if it closed, but if it goes above 15.43, no. If it goes above 15.55, I need to give it a good little distance to break above it. And then it doesn't have to close, but it just needs to get to about 15.55, 15.43 is the number we were looking at. If it does that, there's a good chance it's going to go and test the high that was made on the 12th, and that's a 1666. So the answer is yes, I am looking favorably at that. I wasn't about to, but I am now. But it needs that confirmation. That means you're going to miss a little bit, but then you also gain a little bit because it gives you the confidence. OIH has a little bit of the same pattern. And all I'm going to say about the OIH trading market vectors oil services ETF at 34.13 at 48 cents, it is nice action, but coming from a peak F in this case and coming down so sharply, how many charts have I shown you that look like this? And they're just struggling. The SPY even looks like that. Look, made a peak E. I haven't been able to put the down arrow yet because it hasn't closed twice below the 9-period moving average. In fact, just barely once. So at this point, it's still a plus sign. And that says, yep, there's still a little bit of strength. Watch the weekly chart. It's the same kind of pattern. So that answers that question. The next question was SPY. Do you expect center rally into 1230 or into NF? The payroll numbers in January. I don't really go by those numbers. So all I can say is I'm looking at the SPY right now, and the SPY has a consolidation formation. And it says that, yeah, you can consolidate for a while, but you better not, this is the SPY I'm talking to, you better not close below 224.20. 224.67 was the low right there on the 16th of December. A close below suggests that we're making lower lows and lower highs, and you should be going down. And 223 to 222.20, the 9-period exponential moving average in the weekly chart, would be my targets. All it needs is a break and a strong close above 228.34, and this market is just going to go straight up. I don't think there's going to be even time to get on board. It's that kind of market. I'm thinking that this is time that we're going to use to the downside. Not so much price. That's just the way it's looking at it right now. So the daily on rig had a G/C. I have, you say G/B. Let me just double check. Correct. That should be, no. Yeah, correct. I meant to change that. I did it very quickly and then forgot to change it. Thank you for reminding me. Yeah, G/B. So G is negative, B is very positive. All right, so that's that. And the final question in the questions that I got in the email was right there. CG. So I used to have Carlyle Group all notated. I don't know what happened to it, but I'll do it real quickly here. I'll just do a brief summation. It's trading at 15.40. CG is the symbol. It's up 5 cents. I'm not seeing anything right now, but it might be a case I want to buy strength rather than short strength. And I don't know if I want a short weakness because it has support at that left side low bar, which is at 14.85. So if you want to grab 60 cents, that's a nice profit. Maybe that's the way to do it. I would do nothing right now other than to say I'm watching 15.60 as a potential break upside, and I'm watching 15.10 as a break to the downside. But at this point, I don't think I can say anything other than the weekly and monthly charts need a lot of work, and therefore so does the daily. So I'm going to say nothing. I can do nothing. Would I buy it? I would only start a tiny position at 15.40 because I'd want to add to it on a break on the upside. And I would make the stop so tight that today's low of 15.20 is the stop. Even that might be too much. Hope that satisfies you there. Now, tomorrow night, I'm the guest speaker. Let me just get the chart out here. There we are. Over at the Boston Investors Group Holiday Party Meeting, Wednesday, December 28th, 2016 at 6:30. I'm not sure what time I go on. I think I go on about later than that, about an hour later, I think. I'm not sure. But I come there. Usually we have eats and all sorts of things, celebrate, meet people. It says right here, for both IBD Meetup and Boston Investors Group, please bring food, main dishes, sandwiches, veggies, munchies, desserts, drinks, cups, plates, or ice. You may bring wine or champagne if you like. We will use the first hour of the meeting, the first hour to celebrate the 10th anniversary. And I got to thank, this is very interesting, Jeff for inviting me. So So we will eat in the lounge area outside room 335. Use the time to network, pick the brains of your fellow traders, and introduce yourself to some of the members you haven't yet met. Please fill out a name tag and wear it. For the serious part of the meeting, we'll have a talk with Basil Chapman, and I will be passing the hat, asking for contributions at the meeting. My organizer dues amount to $240 a year, and we have other organizing expenses. So if you can contribute, that'll be very nice. You're not forced to, but if you can, that'll be very nice. So that's tomorrow night at MIT, and I'll give you, it's MIT Building E51, room 335, 70 Memorial Drive, Cambridge. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Yeah, for some of you who just asked the question, so this is in Cambridge, Mass. This is the Memorial Drive side. The entrance is this is MIT Tang Center, building E51. Entrance at 2 Amherst Street, Cambridge, Mass. Here's the map. There's Memorial Drive. There's the beautiful Charles River. That's the other side of the Boston side over here. We're over there, and there's a little street you go down, and it's on the corner. And that's the building. So it's really easy to get to. And being a holiday season, the parking should be no problem whatsoever. Okay, hope that helps you to be able to get there. I'm looking forward to seeing you. Come and say hi. And if you've got a den name, say I am whoever I am in the den, and then I'll know who you are. That's great. So let's do this. I'd like to do this before we wrap up for the day. Let me go through this again. Look, the Dow is giving back a lot of the gains. And this is what I say to subscribers. Everything I'm looking at said there should be limited upside. But at this point, the reason why I don't want to go short or anything like that, not just right now, is that I'm still seeing a little too much upside strength. And I was hoping to get to 19,988 or a little higher, maybe under 20,000. When you take this long to get through a major level like this, it could even take a little longer. And this is would be leg 5 in my Chapman wave. We haven't quite got there yet. But look at this. Here's the uptrend line. You're starting to test it. There's a 120-minute chart. So all I can say is it's really struggling here. And it's just the sideways movement is because there's inertia. It's just not building up that momentum to keep the pace that it had before. So we're going to watch this real closely. And I would not be surprised if we got chop, chop, chop all week. And we might start to make slightly lower lows and slightly lower highs. But when you're looking at the cues, look how the money just came right in. It pushed to the higher high today. That's important. So be a bit careful right here. I would not be adding to long positions unless you're looking at monthly charts and you're saying, hey, I love this. I want to get in now because I don't want to miss a bigger move later on. I am prepared to, and then say I'm prepared to take a 6% loss or an 8% or a 10% before I add the next position in my scaling in. I mean, that's another way to do it. You start now, knowing that this is the worst time to do it, but you want to be there just in case there's something that happens January, the first week of January, where the market wants to push even higher, breakout. All I'm saying is I love the monthly action in almost all the indices. The weekly action is still very good. The daily action, pretty much all the way around, is starting to get a little choppy. Look, the IYM has still not gone to leg D, but I did call it a peak C1 and a C2. And that's going to be very important. What is that? 93, 93, 94. Yeah. So why is that not notated, updated? All right. IWM. I'm sorry. The IWM. That's what I meant to say. The IWM. Peak C1, C2. You can still get leg D. But what it's saying is chop, chop, chop in a kind of a whippy rotational corrective phase. That's really what I'm going to call it. I'm going to put the rectangle right here as we're about to wrap up. Don't forget, you got your swimming lessons coming up. You've got programming all the way through. Have a wonderful rest of the day. I hope you all had a wonderful Christmas and wonderful Hanukkah and a great weekend. And look forward to the show tomorrow. And I'll be back a little later on with Tom O'Brien. Have a great day. Oh, did I finish a little early? That's unusual. I didn't go right through the break. Doesn't matter. Let me look at the VIX, and I'll tell you right now what I'm looking at for the VIX index. VIX.X. The VIX index trading at 1199. If it's able to close at 12.30 today, that'll suggest a little bit of weakness tomorrow. If it closes under 1180, it's at 1196 right now, the market will have a little further upside strength into the end of the day. Thank you very much for being here. Oh, I forgot to show this chart, huh? Well, that was a peak D in the 5-minute S&P. I think I showed it much earlier, and we're still coming down. Have a great one. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.